Leading up to the year 2000, we saw a huge influx of money flowing into technology stocks. The valuations were way out of whack. Non-sophisticated investors suddenly became experts, and a new paradigm was created. Everyone believed that technology was the perpetual boom in which infinite amounts of money could be absorbed. You think that was a bad idea? You came here for the truth. Let's talk about the .com bubble 2.0. That's where I want to have the focus today. Let's dig right in, right away. And this is an article out of The Guardian. It's quite good. I'm just going to cover a portion of it. It talks about the startup boom fizzle and San Francisco's housing investment. Okay, that's what I want to cover. Just going to cover one short piece of that. We are starting to get a lot of resumes from software engineers at companies where the business model isn't working. Okay, I'll just explain the fact that when they say the business model isn't working, that means essentially that people have this idea and they want a lot of money for that idea to then go and build a business around. But of course, they can't get the funding. So they are closing down or cutting back. And that's what it is all about, where they have a lot thrown up at the front, hoping that people are going to buy in, and they make a very big mistake. And that's just the way it is. Now, other businesses, other sectors, they don't go so head first into things. Okay? But it seems like technology is really one of those. Even after the .com boom, it still seems that there's a lot of money there because everyone's hoping to buy into the next Google and Apple and everything else, and they're just trying to make that money right off the bat, just like that. I think this is a big mistake, and we will see that this could be in fact the .com 2.0. These startups are running out of money because VCs are being more discerning about where they place their money, making fewer, bigger bets. That's the way it should have been from the beginning. The number of investments in the private market has fallen by about a third, but the amount of capital is the same. And then last, just to finish it off here, it's been happening for a couple of years. It's not as easy to raise capital, and VCs are demanding better terms. I would say that this is part of the whole economy, and it's not just what's going on in tech, where you can have all this money just sloshing around everywhere, and it's not necessarily the case anymore. To some degree, people are trying to find alternative investments. Investors in sync. For tech companies, funding moves in lockstep. If public dollars fall, private falls too. And this is something that we have seen conveniently since approximately the year 2000, that you have all markets moving in sync with each other since the year 2000. All money, all of everything, leading up into 2008, why was all assets increasing in their value? All assets. It's not supposed to happen like that. You're supposed to have some sectors rising while other sectors are falling, and then it keeps happening. So if you pay close attention to the market, you can move your money around and you can continue to make profit in downturns. That doesn't seem to be happening anymore, and we will see that upon the next crash. In fact, it happened in 2008, and we will see that again. Snapchat, you've seen what's happened with that. Obviously, there's been ups and downs, but the trend clearly is down. We're going to have to see how this plays out, though, in the future. It's a little too early, but it just shows you that technology is not impervious to all the downsides. And then there's this. San Francisco's housing prices. Now, despite the fact that obviously, it's gone up considerably over the years. That's a fact. But it has been rather stagnant for the past few. And obviously, the price being so high, it becomes unaffordable for a lot of people. So the market has, let's say, less buyers for these particular homes. Maybe people are moving out of San Francisco and they're going way out, or they're just moving cities altogether. And you have to do something. I mean, there's a lot of people who in San Francisco, these individuals who are entry-level positions and everything else, that are living in tents and living in holes in the wall practically, and this is not a very good sign for the market. You can't do that, but it shows you the well-being of individuals who are there as well. I thought that was interesting. I just want to switch gears into this last article talking about the oil market. I thought it was interesting. I wanted to bring it to you. The surge in shorts reduced the massive record net long crude position by the second most in history, but clearly it remains extremely one-sided still. So obviously, you have this grand rise that has come up, but whenever I see most in history, I definitely like to show that, and it is right here. We'll see where it goes. I just think that there's a little bit of, let's say, reaction that's been going on. I want to see how this plays out because the price right now of crude oil is, rather stagnant over the past few years. Ever since the price dropped down, it did come up quite a bit, but I would say overall it's sort of been trading within a range here, and we are looking for something to happen. I mean, it all depends on what happens with the global economy. Will it in fact rise? Will there be new wells being opened up? Will the fracking, the shale increase? What will we have here? That's all going to determine right now with oil. And I believe that we could have, if the global economy starts to fall, the prices could certainly come down, and obviously the opposite. So I'm looking for this. Keep your eyes on what's happening with crude oil. Never take your eyes off it. One of the most important commodities, no doubt. If you found this video informative, please give me a thumbs up. Now, if you found the video informative, I know you'll find my books, The Money GPS and Global Economic Collapse, even more informative. If you want to look through the book, just go over to Amazon, and they have these look inside features that will allow you to flip through the pages of the books and see if you like it. Take care.